What's up, guys? So today I'm talking about the variety of reasons people buy real estate, but especially investors. So I'm going to talk about six specific reasons. These aren't reasons I invented. These have come from different mentors that own several $1 million worth of property, tens of millions, a couple hundred million actually. And so, yeah, from different sources like subto, Gator, stuff like that. But today I'm going to list six, and this is the order of importance as well. So the first one is the story. The more active you are in the industry, the more experience you have, it attracts others that want to do business with you. So especially when big investors they hit a certain point, it's like, okay, why do you keep doing this? Why do you continue buying? They usually like it, they enjoy it. It's a passion. B, if they continue buying, it minimizes their taxable income. So at a certain point, it's like either A, in the most simple form, and then this is not tax advice, but in the most simple form, you either pay federal income tax or you just keep buying more properties. Of course, there are more nuances to it than that, but if you want to put it in a real simple bullet point, it's you either buy property or you pay taxes. So the second reason is leverage. So as home values increase, while the mortgage is paid down, your equity is increasing. And then what's really cool, like Robert Kiyosaki talks about this a lot, Tony Robbins mentions it some, but the wealthy actually refinance their properties every 3 to 7 years, and they're pulling equity out. And since this is technically debt, it's tax free. So, and you can even do this with, they call it a DSCR mortgage ratio. And those are pretty investor friendly because it's not, you're not providing like income taxes, W-2 statements, none of that weird stuff. Pretty simple. And what's nice is it can be non-recourse. So there's not a personal guarantee on some of those. But yeah, so the wealthy, they're pulling the money out tax free, and that's actually what they live on. It's not income, it's not cash flow. And so that's how another way they're avoiding tax legally. So the third reason investors buy real estate is the pay down. So whether it's a regular rental, Airbnb, PadSplit, corporate rental, whatever, the renters are paying the mortgage down for you. And then even something as simple as like an extra $100 a month, $200 a month, it can drastically reduce the amount of interest that's being paid. And then if someone were to actually, you know, not refinance, but pay the entire mortgage down, like a 30-year note, something as simple as one extra mortgage payment a year or extra a couple $100 per year, you're shaving multiple years off the life of that loan because you're minimizing the interest that's paid. So then the fourth reason investors buy real estate is depreciation. So there's tons of variations of this, and it does depend on each person's situation. Again, not tax advice, just simple things I've learned from the different mentors I have access to. But the depreciation provides massive tax benefits. So the best way I can compare this to is everyone knows how slow the DMV is. And so the government realizes that if they want the real estate industry to do well, they give large incentives to the entrepreneurs to go out and buy it. And the simple form or explanation of depreciation for regular housing, like the house on the left, is you buy that house, you subtract the land value. So pretend that house is worth 400,000. Subtract the land value, call it 60,000. Now the basic explanation is 400,000 minus 60 of 340,000 left. That's the value of the house. And you divide that by 27.5 years. In the IRS, they're saying, okay, the house is going to depreciate. So we're going to give you incentives to keep buying. And essentially they want to help those people out. And so in this example, I'm going to bring the calculator up here. We're doing So we said 60,000 land value, so 340 is what's remaining, divided by 27.5 years. And so that's per year, that's how much can be written off against the income. Like if you're a real estate professional. And again, there's many variations of this, but what is really cool is even if you're a doctor, lawyer, whatever, W-2 earner, there are loopholes, legal loopholes, where if you run an Airbnb and you do it, someone stays in it less than 7 days, I think it's like twice a year, it allows you where you can, instead of the straight line depreciation example, like this is 1 year for 20 or $12,000 per year for 27.5 years. One example is like a doctor, they can run an Airbnb and they can do 60%. They call this bonus depreciation. They can write off 60% of the value against their active income. So let's go back to here, times 0.6. And so it can dramatically reduce how much tax they're going to pay this year. Like if a really smart play, for example, is a doctor, high income earner, W-2, but they're paying probably 6 figures in tax every year by simply just buying one property a year and running it as an Airbnb temporarily. And I don't know all the rules on this because it doesn't apply to me, but I know enough to help people like this buy properties and help them talk with CPAs. Essentially, though, they can run it twice per year, less than 7 days, and it can dramatically reduce their tax bill. So essentially, they're getting paid to buy a home every year instead of just forking over all that money to the government. So, and when you think about it, you do that 10 years in a row, you own a couple $1 million worth of property, it's dramatically changing your retirement plan. Like any 401ks, S&P 500, all that is a joke in comparison to the alternatives. It's just not as mainstream. It's not as well known. In my opinion, it's not the propaganda that we're all taught. But anyway, the next reason people buy real estate is the appreciation. So when you throw this into a spreadsheet or a compound calculator, for the past 130 years, the average house appreciates. Now, this is the entire US. Obviously, there's more hot spots and cool spots. But the average house for the past 130 years appreciates 5% annually. And then you have to compound that as well. So for example, $400,000 house, after year one, it's worth 420. However, now the next year it's compounding at 5%, but it's the 420. So now it's 420,000, 420,000 times 1.0. And so you could see the first year it increased by 20K. The second year it increased by 21,000 and so on. Like each year that's going to magnify. All right. And then lastly, and newbies usually confuse cash flow as the main reason to buy real estate. But in reality, the true pros, the investors, the seasoned investors, see the cash flow as the weakest reason to buy property. They simply look at the cash flow, a piggy bank, because they know that the property is going to need fixed, there's going to need new appliances, property management, all that fun stuff. And then if they do get to keep any of the cash flow, it's just simply bonus. The way Pace explained it was, those who overly prioritize cash flow burn out and become tired landlords. So anyway, yeah, I just wanted to share some of the reasons that I've learned investors especially buy real estate. And then I just want to show this property that we're buying now. We are turning this into a PadSplit. It's going to be 8-bed, 3-bath, and our net income after all the expenses, our true net, is expected to be anywhere from 1,500 to 1,800. We'll see once it stabilizes. We're going to be renting this by the room. And here's a couple of pictures So for example, this living room, we're going to turn it into 2 bedrooms. The garage will be a bedroom. And this is actually a failed Airbnb, and we are turning it into co-living. And based on everything we're seeing, especially as the cost of living increases, co-living is a highly profitable business model, but it's also helping people that otherwise couldn't afford housing. When you think about it, the average studio, depending where you are, but like Florida, for example, studio or 1 bed, 1 bath, you're looking anywhere from 1,500 to 2,000. Like if you're in Miami, minimum for a 1 bed, 1 bath. But now these people, usually it's a younger demographic. They're exploring, getting job experience, stuff like that. They can rent by the week, fully furnished 1 bed, 1 bath, shared bath. Sometimes they get their own. But anyway, they can get all the utilities and Wi-Fi included for less than $1,000 a month. And so it's very attractive to them, helping them. And it's attractive to us because we get to reduce our risk as well. Because if one person stops paying, it's easier to handle than a regular rental where you lose out on all your income. And then lastly, I wanted to mention this is what our team is focused on, is we are doing by December 31st, 2028, we want to help 500 people afford housing by the rent by the room model. And from what we see, this is about 75 properties, and each property, after all the fees, property management, stuff like that, we expect it to cash flow $1,500 on the low end per month.